If you're purchasing a home, then there's going to be some do's and don'ts throughout the mortgage process that you need to know. By following this list, you can really prevent a lot of heartache, a lot of disappointment, a lot of frustration within your home buying process. On the flip side, if you don't do these things, or you do some of these things, then you're really going to have an issue, and it can really create problems, even get your loan denied. So if you're in the mortgage process, you need to stay tuned, watch this video as we discuss the do's and don'ts of the mortgage process. What's up, everyone? This is Channing, and like I said in today's video, we're going to talk about the do's and don'ts during the mortgage process. Before we jump in, please like this video and subscribe to the channel. It will help more people just like you find our content. And hey, as a bonus, you'll never miss a piece of content either. You'll never miss a video. You'll never miss an instruction. You'll never miss any of the things that we have planned for the channel. So please like and subscribe. But without further ado, let's go ahead and jump in. So like I said in the beginning, going through the mortgage process it can be difficult, and there's a lot of moving parts. And what we see and what we're going to address in today's video is a lot of the common mistakes that people make when they're going through the mortgage process that can really derail your loan. It can cause your loan to get denied. It can cause things to be more frustrating than they have to be, and it can cause us to have to work overtime on trying to figure out how can we fix it when we could have avoided these situations altogether. So if you're one of our clients and you're watching this, thanks for checking this out. This is really important stuff. If you're on YouTube, your loan officer will thank you, if it's not us, for you checking this out as well. So the first thing you want to do is you want to keep all of your financial documents easily organized and available. One of the hardest things for people in this mortgage process is providing all of the documents in a timely fashion. And unfortunately, with a mortgage, you have to be able to prove that you are a worthy borrower. And the way that banks and lenders choose to do that is by getting your financial documentation. So what do we mean when we're talking about financial documentation? Well, we're talking about your pay stubs, we're talking about your tax returns, we're talking about your W-2s, we're talking about your bank statements, we're talking about anything that can go into the approval of the loan. If you've been divorced, if you couldn't get child support, there may be documents required for that. If you filed bankruptcy, there's going to be documents required for that. So we want to keep these things accessible. We also want to provide them in a timely fashion, because the lenders requesting them need this in order to approve the loan. So the longer it takes for us to provide them, the longer it takes to get them, we could miss something that could change the terms of the loan. Maybe it won't be a denial, maybe you'll get approved for less, or maybe it is a denial and now you've invested money and time and you're not going to get that back because we've already gone too far in the process. So it's really important that you keep all of your documents organized and available. And that goes right into the second point, which is you want to respond quickly when your lender asks you for these documents. Again, like I just said, the quicker you can provide these documents, the quicker you can make them available, the more quickly they're going to be reviewed by the loan officer, by the underwriter, and any changes that could result because of those documents will be handled in a timely fashion. If it takes you a while and you've already paid for an inspection, or maybe you've already paid for an appraisal and something changes with the loan, you don't get that money back. So as quickly as you can provide them, it's very urgent that you do that to ensure you save yourself money, you save yourself time, as well as the lender who is trying to be your advocate and have your back. Next, we want to talk about keeping current on all your bills. This can kill your loan. So a lot of people think that once the mortgage lender, the loan officer, pulls their credit and they go through the mortgage process, they're not going to review that stuff again. But that's not true. Your credit is monitored via the lender throughout the entire loan process. So if you go open new accounts, if you make payments late, if you have something go into collection, if you have a new judgment, these types of things are going to come up even once you've begun the process. So it's critically important that you keep all of your bills current, that you don't have any late payments, that you don't go max out your credit cards or any of those things during the mortgage process, because it is monitored. Now, sometimes it may not be caught until closer to the end. That just adds to the frustration of everything that's going on. So clear communication with your lender if anything changes on your credit report, if you've made a late payment, if you've had a status change, are very, very important, because it gives us the opportunity to catch it before it becomes a problem and potentially work around it, or at the very least, if we can't work around it, not cost you, as you're going to see as a theme in this video, more time and more money than it needs to. So the next one is that you need to continue to save money and avoid making large purchases. So as you go through this process, sometimes the numbers can change. Maybe an insurance quote gets bound and it comes back higher. Maybe there's an additional fee. Whatever the case may be, maybe you need reserves. Maybe there's a change to the algorithm and the automated underwriting system. Yes, this has happened. And now you need 1 month reserves, 2 months reserves, 3 months reserves. It's really important that you continue to save money throughout the mortgage process to give yourself the best opportunity, so that if something changes, so that if something needs to be done to the home and you want it, you're able to do that. So don't go spending certainly your down payment funds and your closing costs. We've seen that happen before, but you want to continue to save cash. You want to continue, not cash, but money in your account every week or every 2 weeks from your paycheck throughout this process. But at the bare minimum, do not spend your closing costs. Do not spend your down payment, and then avoid large purchases. So it can be really exciting because you're going to get approved for the loan. You want to go out, you want to buy new furniture, you want to, I don't know why this makes people want to buy a new car, but they do this too. And like, whatever the case is, you need to avoid large purchases. You need to avoid putting things on your credit card. You need to avoid financing new items. That can impact your debt to income ratio, which can cause your loan to be denied. Next is, and this one's really important, and I wish everyone did this, be honest and transparent with your loan officer. So your loan officer's job is to be your advocate during the mortgage process, but we can't protect you or help advise you with things we don't know. So if there's been a change in your finances, if there's been a change in your employment, if there's been a change in your down payment, if there's been a change in anything that's going to affect your loan approval, you need to make us aware. A lot of times we can figure it out if given enough heads up notice, but it's really hard to work around it and figure it out when we have to find out some other way, and now we're all scrambling to try to figure out what to do. So honesty and transparency with your loan officer goes a long way in the mortgage process. And unfortunately, I wish we didn't have to say this, but don't lie. Don't lie to your loan officer. Don't lie to anyone, but don't lie on your mortgage application either. It's a federal crime. It's punishable by up to 10 years in prison and like $100,000 to $150,000 fine. So don't lie. Be honest. Tell the truth. It's going to come out anyways. So the more transparent you can be, the more likely you are to get the end result you're looking for, which is most likely a new home. So be honest, be transparent. The next thing that you need to do during the mortgage process is actually review all of your loan documentation and understand what you're signing. There are documents, specifically loan estimates and closing disclosures, that go out in this process that have numbers on them. Those numbers are going to be what it's going to take for you to close, how much your monthly payment's going to be, what your interest rate is, who gets paid what, so on and so forth. We've done other videos on closing costs. I can link it here. It's very, very important that you actually review that material. Now here at Bayou Mortgage, we take it a step further and we actually do a video review of those documents because we've found that a lot of people don't understand them and so they don't review them. But then what that can do is if you haven't reviewed the numbers, maybe they don't match what you wanted them to match. Maybe the payment is more than you thought was communicated to you or what you thought you heard or whatever. By reviewing the documents, for yourself exactly what the numbers are going to be. You know what you're getting into, you know what you're signing. This is an important purchase. It's way too important to just sign and not pay attention to what you're signing. So please review your loan documents. And then finally, you want to continue to keep your credit score stable. This means don't open new credit card accounts, don't close old credit card accounts, don't max out your credit cards, don't get new loans. Don't do anything that's going to affect your credit score because this is all monitored, as we've already said. So any of those types of things require explanations at the minimum in writing, and then a lot of times that requires documented proof, which can lengthen and prolong the mortgage process, or worse, if your credit score tanks, then it could end up in your loan getting denied. So do everything you can to make sure that there are no major changes to your credit report in the mortgage process. All right, in this section, let's talk about some of the don'ts, which are kind of just the flip side of the do's that we talked about. But the most important one of the major ones right off the bat, do not Do not, I'm speaking to you in the microphone here. Look at me. Do not, please don't quit your job in the middle of the mortgage process. It's going to result most likely in your loan getting denied. And I don't know what happens and why people do this and why they don't communicate it. Maybe they don't think it's a big deal. Let me be your guide here. It's a huge deal. Do not quit your job in the middle of the mortgage process. Don't change jobs. If you know that you're going to change jobs soon, you have to let your loan officer know, because there are a totally different set of requirements when that happens. So if you've got a job change planned, you need to let your loan officer know immediately, and when it's going to happen and what it's going to be, because there are a whole host of things that can happen. Maybe you go from being salary to commission. Well, you're not getting a loan now. Maybe you go from $30 an hour to $25 an hour. Now your income's decreasing. That could change your plan. Maybe you're going from $25 to $30 an hour, and that's the reason you're leaving, is you're getting a promotion. It's still going to affect your mortgage process, because it may slow things down, because we typically are going to need 30 full days of pay stubs at the new job to be able to use that income at minimum. So do not quit your job. Number 2, don't lie. Don't lie to your loan officer. We already talked about it. Don't lie on your application. Tell the truth to the best of your abilities. If you're not sure, then ask. That's really, really, really important. Don't do anything that's going to affect your credit. We just talked about that, right? We don't want to max out our credit cards. We don't want to close accounts. We don't want to open new accounts. We don't want to buy furniture or a car during the mortgage process. Don't make any large purchases. Don't ignore your loan officer when they request documents from you. It's not going to go away. If we're asking for it, it's because the underwriter is typically requiring it and we need it. So it's not going to go away. We're going to have it. Don't ignore the loan officer when they're asking you for your documents. So that's a quick recap of the do's and don'ts during the mortgage process. There's probably more that we can talk about, but these are the big ones. These are the ones, unfortunately, that we often see. So if you have any questions about what you should do and what you shouldn't do in the mortgage process, you can reach out, link in the description, link in our about section on how to get into contact with me. I'd love to help you. For everyone else, please like this video, and those that need me to reach out. Please like this video. Please subscribe to the channel so we can reach more people just like you, and so you never miss another video. I'm Channing, and I'll talk to you soon.